So so for you, it's like, all right, all right, so you're just starting off.
Yeah.
Okay, and you're like, you remember back in the day, what you say the story was, you used to go pick up the paper for your dad, and you looked at the stock papers,
Yeah, I just be infatuated by that zone, man.
right? So right now, you just downloaded TradingView.
I got Robinhood, TradingView, and I just bought a stock on my Cash App.
Okay, okay, right, right. So you test. I mean, technology is. I mean, the thing about what's good about today's technology is that back in the day, I mean, not even that far along. I mean, we go back 10. I mean, 5, 6 years. You had to work with brokers. You had to use certain platforms, and now people can be their own brokers. They can be their own investors. So now you can buy things everywhere. But more importantly, we have this thing called crypto, which is a whole nother.
That's
Mhm.
what I don't understand because I keep getting crypto confused with the stocks.
Yeah, yeah, yeah. So,
You feel me,
yeah,
man?
yeah, yeah. So stocks are simply based on companies, right? Like you can buy Tesla, Pepsi, companies, right? Crypto is basically they what if you were looking at the stock world, they would be considered IPOs, which means they're ideals of possible companies and a thing, technology that could be used for things in the future. And right now, that's why people say you're early to crypto because a lot of these coins they're all competing for a space in the real world, right? And what crypto, the difference is this is that blockchain, right? Blockchain technology, which is simply the technology behind all of it, is the ability to take everything that is in the real world and tokenize it into Web3 or onto a crypto platform. So it changes how everything can be moved around and transferred, right? So for instance, when you buy a stock, you're online ordering a stock. It's like having a piece of paper or a deed. And when you buy crypto, you're buying coins. So a stock might have the option to bear why it's $2 a stock, $3, $20 a stock. Where crypto, by being tokenized, is you don't have to buy a stock. You can buy literally tenth of the stock, right? Because it's tokenized. So you could buy as little as you want, but that allows more people to buy more little pieces and slowly work their way into a full stock. So let's say Bitcoin was a stock. Bitcoin would say, "Oh, I'm selling Bitcoin right here, right?" And they say, "All right, it's $122,000 a stock." And you're like, "Man, I don't have 122,000, but I want to be in Bitcoin, right?" And this is where they have places where you could buy shares and then you get a quarter of it or 5%. Well, crypto makes it easy because if you wanted to buy Bitcoin instead of it being a stock, it's tokenized. So you can literally buy a tenth of a tenth. You can buy whatever you wanted, right? And you can add that up because it's all tokenized. It's just coins, right? It's pieces of coins.
So
So
it ain't really backed by nothing, pretty much.
right, right, right. Nothing. So that's the thing about crypto. It's a technology, blockchain, which is the technology and the ability to create all these things. The blockchain is revolutionary. There's nothing going to be like it. So, like what the internet did for businesses, as far as being able to, instead of sending a fax or this, you can email. Now we talk on video chat. Now every store in the world is on the web. I mean, everything you do is now on the web. So what crypto is going to take the same format and take everything that you do in the regular world and tokenize it, right? So there's limitless uses for crypto, but there's not like they're still all competing for certain spaces. Like so, if you as you learn crypto, you're going to come into a spot where you'll hear about what's called like what people right now are fighting over is like the banking area, right? Which is where you'll hear XRP's name a lot. Um, you'll hear Solana, you'll hear XD, like XLM. So there's certain coins that are in certain areas that people believe will be the pick for that area. And then there's other coins like Quant and Chainlink, which are basically coins, and their technology behind the coin is that they connect the outside world to crypto, meaning that if a company wants to use blockchain, Quant, which is a coin that you can invest in, will their company has the technology to help a company use their technology to bring their systems over to crypto or blockchain technology. So like an interface. So think like a computer, right? So this would be, yeah, so like a computer, you buy a computer, but you need a motherboard. Quant is like a motherboard. Chainlink, Chainlink is like,
it's like two different universes trying to collide with each other.
Right. I mean, it's all going to
Got it. That
yeah.
makes a lot. Okay, that makes sense. Now you broke that down to me beautifully, man.
Yeah. I mean, so right now, blockchain is there. It's building the technology like a computer to bring the regular world over to the tokenizational world. So there's coins that do certain things, or companies that have coins that do certain things, right? The coin is basically like having their option of a stock to them, right? So in this space, the technology they're building to connect the outside space, like companies, to tokenization through Quant and Chainlink, their company is built basically saying, hey, we're not going to get investors, we're going to start a coin. The coin is going to be the way that we raise funds and build our project. So then that's why you hear a lot of people debating what's better, whether, it's like, it depends on how long you've been in the space. If you're going to be in the space, you're going to hear how, everyone wants Bitcoin to be the next dollar. But the realization is it can't be that because of its limitations. But then they say, well, it's like gold. And the reason why they say it's like gold is because they're comparing it to the original dollar, which is where the dollar was backed by gold. So theoretically, Bitcoin is the liquidity or the bottom bank of all the crypto network because it's the largest current crypto.
Well, from my understanding, I'm glad you brought that gold thing. To me, from what I've been seeing, it's better than gold because you can't transaction gold the way you can transaction Bitcoin.
Well, that's what we're saying. That's just blockchain, right?
Okay.
Blockchain, every coin can do what Bitcoin does. The difference is, the questions are, is Bitcoin security better than other coins, right? And is, because it's scarcity of 21 million coins, does that make it important, right? What makes Bitcoin important to the crypto world is simply this, right? Is that it's the first coin made from the blockchain itself. So it's the emperor of the entire system, right? But that doesn't mean that it's the best system. It just means that it's the emperor. Now, what it has done is that the thing about crypto on an overall, like an entire platform, is that when you take a coin like Bitcoin and you create forks and you create other coins like Litecoin, Doge, and all these things, every coin that you create is on is basically connected to Bitcoin on its highway or inside of its ecosystem. So that makes Bitcoin important because the ecosystem of Bitcoin is the liquidity of every other coin, right? It's how it operates. Just like when you buy Solana, if you have a meme coins and they're buying on Solana, Solana's price goes up because people are buying meme coins that happen to be in the ecosystem. But if those ecosystems didn't exist, then Solana's price would go down because it's they're sharing money, right? So for you coming in, the one thing you got to remember, because there's a million conversations we can have about, long investing, what vesting we should have, blah, blah, blah. But at the end of the day, the real way to make money is not, investing in something and holding it for the next 20 years and deciding what technology is going to happen, because that's what happened in the era of the internet. Remember when the internet happened, there was Net Explorer, there was Internet Explorer, there was all these ways to get on the internet, and at the end of the day, Microsoft put their system on computers and pretty much stole the market.
I remember that.
Yeah, so you'll never know who's going to steal the market. So everyone who was holding all those other companies, they completely lost. Like Silicon Valley, 2% of Silicon Valley that made money, I remember
the stories about Silicon Valley.
Yeah, they only owned 3 stocks. So when people talk about, oh, these are the great investors, no, they just were lucky. They weren't investing; they were buying one thing that mattered, and so they were buying Microsoft, Google, and I forgot the other thing they had, but that was it, right? And if that would have happened, if they wouldn't have basically cornered the market and forced that to happen, then none of them would have made money. They're not geniuses. They're just, they're just they're better at strong arming. But what I'm saying is this: when you get into crypto, the real thing you want to do is just get your money in at their strategies are: buy low, sell high, right? So,
I got a question. So instead of putting my money in,
you paused on me there for a minute.
oh no, I'm sorry about that. I said instead of me putting my money in these stocks, because like I said, I'm just still trying to learn the system, how to, the ups and downs, the highs, the lows, what they say, the bears and the bulls, and all
The bulls and the bears, yeah. Well, those are just market cycles. But so here's what you have to do, right? The gist of it's real simple. You have to break it down to simplicity, right? I don't hold anything. So we have what's called moon bags, right? Every time I make a certain amount of money, I put money into a particular coin that I like, and I'm only picking the coins that are like organizing labor. I'm only picking the coins that I know are going to be in the top 10, right? Hold on one second. And so, for instance, for me, I know that Solana is going to be a big player. So I'm expecting Solana in the next 10 years to be worth, and this is not financial advice, this is just me, my personal journey, to be somewhere around, $3,000 to $5,000.
Right.
Why? Because everything else is.
And that's per stock, right?
Yeah, that's per coin.
Per coin, not stock.
Today it's at 200.
Okay.
So I'm expecting it to literally do a 10x from where it's at today. So as long-term holder, where you have extra in after you make money from my gains, right? Because the goal is this, man. The goal is to be financially secure, right? And you should never be in a situation where you're only doing one thing to make money, right? You should be like making money buying property, renting property, right? That's residual income, right? Like one thing I do is a very simple goal is this, right? I find areas where houses are 200,000-300,000 that are very rentable, and I know they're going to continue to be rentable, and I know that area will double the price or go to 600,000. So in a 10-year period, if I'm buying one or two houses every year, and in 10 years I get to let's say 20 houses, right? And those houses were a quarter 300,000. Now they're worth 600,000, right? At the end of it, sitting on $500,000 plus I have residual income, and then if I'm sitting on that, I can always count on that income, and my properties are doubled anyways. So at the end of it, if I sold 20 years later or whatever I did, or I could just, the smart thing would be just to borrow it and go in debt and take the $500,000 and buy other things and keep getting residual income, right? So once you build residual income, that's financial freedom. So holding things like cryptos and things like that, there's a play there, right? If you get 30, 40, 50 grand in Solana, it does a 10x. Well, that's $500,000 in 10 years. That's kind of like a retirement plan. So the first thing what I tell people is, hodling is not going to make you rich. And, for all the people that, they'll come, you'll hear all the people like, yeah, man, like I said, not financial advice, but everyone will come in and say, yeah, man, just buy and hold, right? And to be honest, if I broke it down, I can explain why that doesn't work. So for instance, let's say that you bought.
So like if you buy and hold and that shit tank, then you fuck.
Yeah.
Fuck that.
But let's go through a scenario where it does well. So let's say like Bitcoin, right? So let's say you got in Bitcoin and you bought it 7 years ago, and let's say that you bought it for $10,000, right? And you put $10,000 in Bitcoin, and you were like, man, I got 10,000. Or, we can, at that point, and we'll do basic numbers here. And now, fast forward, 10 years, 120, right? So now, each your coin is now worth 120,000. So you're like, man, I only put 10,000 in, but I'm up 100,000. So that is where people like think to themselves, that is how you invest, because my 10,000 is now worth 100,000. But it took 10 years. So let's be fair. Let's do it a little bit different. Let's say that you had money. Let's say it's some guap, right? So I'm gonna do this times 5. I'm gonna say that you had guap and you put 50,000 into Bitcoin 10 years ago. Now you got a half a million today, right? And you were like, yo, VC, you don't know what you're talking about, VC. I bought Bitcoin at 10,000. I'm a G, and I'll be like, okay, but let me show you. So let's say that you have a system, right, or a strategy. You take $2,000, right? You make one trade, and you make 30% on that trade, which means you make $600 on that trade.
$600,
Right. Now you make 4 of those trades a week. 56 weeks a year.
That's how people doing it.
Right.
Working the system like that. Okay.
Yeah, 56 weeks a year, right? Now, if I, in half the time of Bitcoin, who made more money?
Yeah, you broke that down. I like that.
Now, if I did 10 years,
okay, so
they sitting on a half a million, I'm sitting on 1.3 million. Who won?
Right. So to be on a more realistic scale, like everybody don't have 10 grand. I know I don't have 10 grand sitting around. More likely, most of the people that's watching don't have 10 grand. If you do, congratulations to you.
Right.
But from a, and this is right here. This is for people that's listening that just now starting to catch on or get invested into this, as well as myself. Somebody who's in the 100, 200, 300, 400, so on, $600, $700 range, because we don't have thousands to splurge on this right now, right? No, this is just for educational purposes, okay? What will be the best route? I'm not gonna say for a quick come up, because I'm in my business. We don't do quick come ups. You know what I'm saying? We stay in, we grind it out, we build, and then when we sit back and look at the results on paper.
Yeah.
Right.
Well, that's why you need a strategy. Well, you need to. So here's what you need, right? So a breakdown of this is going, and I'm only kind of like cutting you off here and there just because this will all be recorded, and I'm gonna use this as a conversation for like, are you new to crypto? So I just want to get to details so people don't get bored or like, man, it's a 3-hour conversation, because I could teach you about crypto for 24 hours.
But I can listen for 48.
I know, but here's the truth about it, man. This is as simple as it is. What's up, MB? So this is how simple this is, right? It all comes down to this. Right, just like I showed you, like in 10 years, if you would have done the system that I do, you'd have 1.3 million instead of 500,000. So here's how it works. There's.
And this is for the new people.
That's for the new people, right?
Okay.
The very first thing is that you have to have a system. Okay. Now there are hundreds of systems, right? And the most commonly used system is where people buy bottom or buy low, sell high, right? So that system, right? You have to find a system that shows you how to buy low, sell high, right?
Okay.
So that's the first thing. You have to figure out, how can I find out where the buy low and that is, right? So I'm gonna show you here where most people will come in, and what they'll do is this, right? Is they'll go to a time frame. Let's say a 4-hour time frame, right? And all they do is they look at the 4-hour time frame. And let me jump on a coin that I have. I'm not trading. So let's go to what did somebody say? Wi-Fi, Wi-Fi? What's it called? WLFI? What's that? World coin. Okay, here's that world coin, right? So for instance, here's world coin. I don't trade world coin, but I'm gonna show you what people do. So if they're running a strategy, or let's say a system, here's their system, right? Their system would be to go to a 4-hour, right? And they would go like this. They would take a line, a trend line, and they would say, okay, this is the top, currently. This is my bottom. You see? So then all they would do is say when it you see how this had these lines here already? See these lines right here? So these lines that are here are actually like they come with. So there's another system you probably, the longer you start learning how to trade, you're gonna come and learn. This is called the Elliott system. Okay, these are Elliott waves. So the Elliott wave system, right?
What's crazy is I'm looking at you place these tickers in certain area, and it's like, man, how do you know where to place what and where? Right. Like, it's fascinating to me, man.
Right, you see these lines right here?
Okay.
So if you use an indicator, right, and I'll show you the indicator. This is called the Elliott wave indicator by Locks Algo, right? It's free. It's on TradingView for you. Okay. And what that does is, you see these. This is a strategy, right? This is a system, right? A system called the Elliott wave. And how this system works is that there is a wave 1 up, right? And there's a wave 2 back down, which is normally a pullback. And then wave 3 is the biggest wave of them all, because normally wave 3 is bigger than wave 1, right?
Okay, question.
Yeah.
This has nothing to do with the time that the stock market opened and closed, or none of that.
So that's a strategy, right? Systems and strategies are different, right?
Okay, I got you.
Yeah, systems, right? Systems. What you have to do is you have to find a system that can. Okay, there's a thing called the law of average. Okay, and the law of average is this: is that when something happens, like cause and effect. So when there's a cause, there's an effect, right? There's an effect. And in a law of average, when something happens, on average, it does something else, right? So every time, like a wave, right? So these are just waves, okay? And here's what this is. It's like this. So in this system called Elliott waves, they have a system where they have a wave 1, and their system says that wave 2 will pull back 50% of the time up to 80%, and then wave 3 will retouch the top of wave 1, which normally gives you a strategy, right? Meaning that if you have a system, right, and I'm gonna put arrows here for you, right?
Okay, now is this like if you go, let's say, like you look at the chart and it says like this time last year or a week ago, or is that what you're saying? Like you got to look at the pattern over.
Right. Sort of like that. But see, this is called a 4-hour time frame, right? See up top here, I got a 4-hour. So normally, a system which would be something like the Elliott waves would have pattern systems to it, right? And what they're trying to do is they're trying to show you that there's a people call them patterns and stuff like that, but what it's trying to do is like it's trying to give you the law of average, meaning this, right? And the law of average is this: if the wave 1 goes up to a certain level, a pullback is normally, and this wave 1 is right here. So wave 1 basically would have been to this top here, right? See this top? Wave 2 would say that their system is that it pulls back to this level here, right? And I'll zoom in for you here so you can kind of like. So wave 1 goes here. It pulls back, right? 50% of the way, right? So the first wave goes up, then there's a pullback to this wave here, right? That is what we call the bounce, right? Now, after that happens, the next wave, which is wave 3, the one thing that is a continuous of this theory or this system is that it will touch the previous high, and 60% of the time, 70% of the time, it will go past it.
Okay, and so when you see that happening, is that your
so this is a system, okay? The system is that if you're doing the system based on Elliott waves, okay? If you're doing the system based on Elliott waves, you would look to find, okay, and this will make sense as I go on. So as you look to find a breakout, right, a move to the top, when it pulls back, it'll find support. And then from the support, it'll bounce and run back to the last previous high or above. Okay?
Okay, so looking at that is going to determine when you buy or sell.
Right, based on your strategy, right? So this is a system. So if you were doing an Elliott system, Elliott wave system, which most people do, they would be looking for this move. Now, this comes down to your strategy, right? And here, let me explain strategies for you. A strategy is this, right? Well, you will hear most people say that they have what's called a channel, right? So a channel is going to be basically where a coin starts to go sideways, right? You ever heard of that? Go sideways? Okay, so when a coin goes sideways, that just means that it is bouncing up and down at the same level, top and bottom, right? So that's called a parallel channel, right? So for instance, this particular coin here, a parallel channel would be the bottom of the coin here and the top where it keeps rejecting, right?
Okay.
So it would start going from this bottom to this top, back down to the top, back down. You see how it's touching all those points over and over?
Yeah, it's like it's bouncing.
Yeah, it's bouncing. Yeah.
What they want to do.
Right. So you have this is the bottom, then this is the top, then this is the middle. And it bounces off the middle, goes back to the top. Then it goes back to the bottom. And then it breaks through the bottom, and now it's back up to the middle, you see?
So when it breaks through the bottom like that, that means you have what? I mean, explain that when it breaks to the bottom like that.
Well, here, so this is a big channel here, right? And now I'm going to show you a smaller channel here, right? And then I'll go break down the strategy for you, right? Now you come over here. Let's get another parallel channel, and then this channel is basically smaller than the one we had earlier. It looks like this, right? Where we have a tighter bottom and and then it goes through the middle touches the top, goes back to the bottom. You see that? So now let me show you what's called strategy, okay? So now that we have a system, right? So let's say that you're doing the Elliott wave system or the channel system, right? So these two systems together would give you a very simple ideal. When you see an Elliott wave go up, you know it's going to have a 50% pullback. Inside this channel, you can see that there's a pullback here to 50%. So your strategy would be that after wave one goes up, you would basically measure this, and I'll show you. This is called a long tool, right? Long position. And if I measured from the bottom of where it took off over here, this circle right here, and I measured to the top of where it went, you can see that's the 53% move, right? Half of that.
So basically, that thing is telling you where the coin is going to go eventually.
Right. So that's what I'm saying to you. You have systems, okay?
That's a system.
Then you have strategies. You have to figure out your strategy, right? The system says this, that after a wave one reaches a peak, it will pull back 50%, 5 out of 10 times, right? It's not. These aren't. You got to remember when you're trading. So you can understand the numbers here, right? The very first thing is this: every trading system that you see out there, or strategy, right, or system. This happens to be a system. Is only right 60% of the time. Okay? And so let's say you hear people say something like a bull flag or a bear flag or a certain candle or some shit.
Yeah, they call them candles. That's just like confusing.
Well, candles are also ways to have strategies. When you see a certain doge candle, that means, or a hammer candle, on certain time frames, you would say that was bullish or bearish.
Or bearish,
right? Right. And I'm going to explain. I'm going to show you all these. So there's 100 to 1,000 different systems that people could incorporate with candles and patterns. Okay, I'm gonna give you the main ones that everyone really kind of uses so that you can understand, because really the whole point is to buy low, sell high. Okay? Now, within this simple Elliott wave and parallel channel system, all the other systems exist, right? But I want to keep this simple for you so that you can understand, because it doesn't really matter what they're all saying. It's just basic. So what this means is when you see a bottom and it jumps, after the jump, the pullback is called wave 2. It normally,
it's gonna pull back
every time, brother.
every time. I got you.
You know why? Do you know why it's going to pull back every time?
Because people gotta buy in.
Nah. Because all the whales that bought here with $300,000, by the time this move's done at 50%, do you think they're going to cash out $150,000, or do you think they're just going to hold and watch you sell?
They gonna hold and watch you sell.
No, they're going to sell on you. Because these coins don't have any value. So if I bought this coin at 17 cents and all you retail investors ran it up to 32, and I just made it.
For me to pull out.
Yeah, why would I keep, if I just,
Got you.
right, why would I, if I made $300,000, why would I keep holding?
Right.
What is this going, is this going to the moon? Is the money never going to end? Is everyone billionaires? Okay? The only reason the people bought here is so they could sell. So when they reach their target, guess what? What do?
They sell.
Okay. Very.
So if I go to, I pull up one of those charts.
Mm-hmm.
I watch that chart and apply the same method to each and every last one of those charts.
Mm-hmm.
That's simple.
So that is right. So theoretically, right, it's supposed to be that simple, because that is basically the ideal behind the entire concept, is that you buy low and sell high. Now, the $1 billion question, or for instance, in this scenario, it's the $1 million question, if you want to make millions, is why does 95% of the people that do the same thing don't make money? Right? Because if everyone's buying low and selling high, and everyone knows that when something goes to a certain level, it has to come back down to another level and then bounce again.
Everybody will be making money.
But why do 95% of traders fail? That's the question. That comes down to human nature. That comes down to greed. That comes down to somebody holding too long. That comes down to you.
So this is why I hear a lot of people on YouTube and TikTok say this can be an emotional game, right?
It's a 100% emotional game. That's where people lose. Right? You're not, this is a trading, this is a system, mathematical game. And everyone is human, so they go with their gut and their emotions, and that's why they lose.
Instead of following
Instead of following a system and then creating strategies that make them money. You understand? So let me show you here real quick. This is a system called an Elliott wave system. It goes wave 1, pullback is wave 2, wave 3 is supposed to be higher than wave 1, and then wave 4 and 5, and then there's a correction, right? Now, most people trade wave 1, 2, and 3 because those are the most dominant waves. The other waves are choppy because everyone's already made money, and now it comes down to when people are going to sell, how much they're going to sell, how much retail investors are buying at the wrong time, how many bad investors are out there, and it's a bad situation. It ends up always being that they lose there, right? So that's the issue when it comes down to everything around. So here's a system, just so you understand. Systems and strategies, right? So this is a system. A system is to find wave 1. Wave 2 is a pullback, right? 50% to 70%. And wave 3 is normally bigger than wave 1. That's a system. Now, to kind of explain it to you, if you were building, now that you found a system, let's say you say, oh, I like the Elliott system. Now you got to create a strategy on how to make money in this system.
Okay. Here
So,
we go. Back to where we started.
right,
Find
now
the
here,
system first.
right.
Okay, all right, man.
So
Hey,
now let me
glad
explain.
I ran into you.
Yeah,
Okay.
now let me explain to you a strategy, which most people do.
Okay.
Most people have a strategy that when they see a wave 1, right? Because when something's going in a direction, what they look for is a reversal. So if something's coming down, like this one was coming down here, right? You see how much that came down, right?
Gotcha.
They don't know where it's going to stop because they don't know where the market makers think that it's a fair value for the market. So when this starts to go sideways, right? This is a parallel channel, right? And I'll break this down. I'll make it a little cleaner for you. This is, we call it a cluster, but what it basically is a parallel channel. So on a smaller scale, you have a parallel channel, which is this area here, and I'll make this yellow, right? So what this is here is that the top and the bottoms here that are constantly being hit, like you see these bottom, top, right? Let me fix TikTok real quick. There we go. All right. So while it's doing this sideways move, what most people do is this. They wait for it to break out of the top of the channel. So you see the top of this yellow here?
Uh-huh.
Once it breaks above this channel, right? Because they don't know what direction it's going to go. It's going sideways. They don't know what's going to happen.
So it could. So let me ask you a question. So it could keep going down lower. It could keep going down.
Oh,
before
yeah.
it can break.
Yeah.
Oh, that's scary. That's some scary shit.
Yeah. So you don't know which way it's going to go because you in this system, right? In this particular system, and like 99% of all the other systems, they don't actually know how to tell you what this is going to do. Okay? All they know is this. If it breaks down below the line, that it could bounce back up and hit the line, the bottom line, and reject and then fall down even further. You see what I'm saying?
Nah, that ain't. Yeah. I feel you. Because I'm gonna tell you this for the people that don't understand this. If it projects back up, in my mind, I'll be thinking, okay, it's time to buy now. But if it dip back down, you fuck.
Yeah. So here is let me give you the strategy, right? So the strategy is this. Since they don't have a way, or they don't really understand, they don't have a system that can tell them when this is actually going to go up. What they do is they let a cluster or a parallel channel form. And then on this particular thing happened is this. See how it broke above the channel here? What they wait for is now they would actually put their buy zone here. So when it broke above here, it reached the price of $26.74. You see? I'm going to zoom in on this one for you so you can kind of like see this for you, right? So here it's $26.74. Well, people aren't good investors aren't buying here, but someone like you might say, it's running, and you might buy up here.
Right.
Then what happens is it pulls back, right? And you might panic and sell, okay? But just so you understand, the strategy that most people who are learning how to trade would do this, right? What they would do is they would wait for it to break above that yellow line, which was what they call resistance, right? Because when it's in the channel, it's going up and down, you see?
That's called the resistance.
Right. This is resistance. This is support, right? This is a channel. Because it's touching top, bottom, top, bottom, top, bottom. When it finds a breakout, whether it's to the top or to the bottom, that lets you know what's going to happen. This is what people who are going long are looking for. They want to see this break above the channel, which it does here, right? And when it does, it reaches $26.74, so 26 cents up here, right? Well, good investors know that it has to pull back because wave one, wave two. You see how that works? Wave one, wave two.
Right.
So you, as an investor, would put your buy zone back on the resistance that it broke out of. because the odds are 60% of the time it's going to come back to that.
And you don't want to chance it and dump too much money and then.
Yeah, you don't want to buy up here because that's not a good entry, but most uneducated people do. But what this is that the what I'm telling you is a trading strategy. The trading strategy is to wait for it to break the resistance, then come back to the resistance for support, and that's where you would enter, and that is where people enter and then say, okay, I'm running this trade from here. So that right there is basically what we call a strategy. And this is the most common strategy because you'll hear people say, once it breaks up, I'm buying the retest. That's considered a retest. Okay? Now, in the Elliott waves, it's wave 1, wave 2, there's your breakout, right? So that's the difference. So the system, right, is a setup to kind of let you know what's happening. The strategy is what you're going to do when the system tells you or shows you what's happening, right? And this particular form, it's a very simple strategy. Is when you see a cluster or you see a coin go sideways, when it has a top and a bottom, when it breaks out, right, on the 4 hour or whatever, like I said, I use the 4 hour, but you can use a 1 hour, whatever you think. Whatever strategy you have. When it breaks out and it retests the resistance, which now becomes support, that is when it breaks out, you would put your entry on the resistance line because more than likely it's coming back there. And then when it hits there, it's more than likely going to bounce. And do you know why it's going to bounce from there? The reason why it's going to bounce from there is because 70% of traders trade this strategy. So that means most people are going to put buy orders at this price.
Which makes the coin go up.
Exactly.
Got you.
So if you're trading a strategy that most people trade, well, then the odds of you being successful are 60 to 70% versus most people's 20% because they're not trading with the people. Do you understand?
Yes, sir.
Okay, so now we're going to take this same thing and I'm going to show you the same thing that happens on a smaller scale. We go over here, right, and we see that this coin, let's see here. So as we move along, we come up to another section, and these are all just sections of like, you can find every time this happens, there's another section. So here we go again, right? So here we go up here, right? And this is kind of like the Elliott wave side. So when you see this breakout, we see this run to the top here, right? That would be a wave 1. And then wave 1, let's say we measured from the bottom of the original breakout right here, which is where the bottom of the support was before it broke resistance, right? So if I measured that, which would be the bottom of this white line, and I went to the top of where it went, right? So you can see up here, I'll bring this down for you. So you see that equaled 54%, right?
Which is good.
Well, yeah. We don't worry about that. But if I took and I said after a 54% move, based on the Elliott wave system, I know that it will pull back 50%. So if we're at 55%, the pullback of 50% would be 25, 20, and 55 would be something around 26%, right? So this tells me right here that based on the Elliott wave system, I can expect this top that happened up here to pull all the way back to this level here. And I'm going to turn this white so you can see it. See this white line here?
Yes, sir.
So now that you are doing the Elliott wave system, you know that the pullback is going to be at least 50%,
50%,
right, which is here, all the way up to 70%, which is here, right? So now what happens is, if you're doing the Elliott wave system, is that in that pullback that everyone's watching and everything that's happening, and this is why systems are important, because it kind of gives you an idea what's happening. We know that it's going to pull back either to this white line or it's going to pull back to this white line. See? So now you have two things that you can do. You can put an entry back here after that you close this first trade and say I'm going to buy at 26.43, or you can.
So when you mean buy at that first trade up at the top, so once it gets to that breaking point, you go ahead and sell.
So here's the system. The system is that when there's a wave one, which was this big move, right? Let's say you didn't get into this first trade down here. You missed this first trade. Let's say you're doing a wave 3 system. Okay? So your strategy is to let a coin have a wave 1, and then what you're going to do is you're going to buy the wave 2 pullback. Right? So you say just like the other strategy was to break above the resistance and then retest and run. This is the same type of strategy, except you're letting it break up in wave 1, and then when it comes back down, you're buying the new support, which used to be resistance. See what I'm saying? So after this big run of 53%, you know that it's going to come back at least 50%. So you would put a buy at halfway down. Because you would expect it to at least come halfway down, or 70%, which is a better entry. But this area here would be considered a buy zone between 26.50 and 24.50. Okay? Now, when that happens, give me 1 second here. So when that happens, right, that's called an Elliott wave system. If you were trading based on the Elliott wave system, you now would make a decision that your strategy would be to buy the 50% pullback to 70% pullback, you see? So you can put orders from, this would be considered a buy zone, this square here. This would be the difference between 50 and 70. So in this little zone here, I'll turn this blue, this is called your buy zone. So inside of this buy zone here, you would be deciding, this is where you would be buying. And you ever hear people say cost average buy? They would start buying in this area from 26.36 down to 24.46. So they would buy all this area up. Then wave 3, which is the next move, right? And I'm going to make this next arrow blue so you can see the difference. Then wave 3 is normally bigger than wave 1. But the system says that it's at least going to go back to the top of where it was. So no matter what, your strategy would say that it's going to at least come back to this blue line here. See? Mm-hmm. So you can measure this and say, okay, if I bought at 26.36, this is going to go back up to the original top, which would create a double top. So I would make at least that 23% back. See? That would be a target for you. Get it? This is a strategy. Now, most of the time, wave 3, which is what this is, it goes even further. But that's just your first target zone, take profit halfway up. And this actually goes back up and gives you another 50%. See? So if you were in this trade and you bought that retest, you just made 48% on wave 3. So now, what you have to understand is these are systems, and once you have a system like the Elliott wave, right, and the parallel channel breakout, once you have the system of basically what is the probability of what's supposed to happen next, the smart people at least use the system. And guys, if you're joining TikTok, don't forget to share the live. Help me out. Share the live, guys. Share the live. Don't forget to follow. That way we can get more people in here. But here's the thing. When you are doing the most common system and you are trading the most common strategy, that means you are trading with the masses, which means the probability of this trade doing the same thing every time you see this happen is about 60 to 70%, right? So that's why you have to have a system, and that's why you have to have a strategy for the system. Does that make sense now?
Yeah. So the Elliott wave is the system.
Mm-hmm. And the Elliott wave combined with what we call parallel channels, that's when a coin goes sideways.
Okay. Gotcha. Gotcha.
And then your strategy is based on the parallel move, right? So basically, when something goes sideways, right, and this coin doesn't really have too much, but okay. So for instance, all it is let me get a different time frame so the candles are more structured. Okay, so here, so this is what I can show you here. So you see, and I'll go to a smaller channel, right? Okay, and I'm going to open this up a little bit.
I see how I see.
Yeah, this is easy to see. So this is a 2-hour time frame. Okay, so all you do is you take this box, right? This is called a parallel channel. It's a tool that you can use on TradingView, right? And all you do is you put it at the bottom of your not like the wicks, right? These crazy wicks, but kind of like the average, right? Let me make this a little. Let me bring this a little smaller because I was doing bigger waves. Okay. So now let's do this, right? So here's an area, right? And now when we take our parallel channels and we kind of put them based on what we have in front of us, right? So here you can see.
How do you know where to place them though? That's what I'm trying to like right now. Even with that, when I'm
so let's walk through this.
Because you know what you're doing, but I don't know.
Here. Very simple. So let's say that you're watching a coin, okay? And a coin is coming down and doing these moves right here, right? When this coin dumps right here, you see this dump?
Right.
It'll then create another candle, right? And then it'll come down and it'll dump again.
Okay, so what?
Now, hold on, watch it. And now you're watching, now these candles are 2 hours. So in the next 2 hours, I'll get another candle. So if I see that this candle is basically staying in the same range, right? And I can see that the bottom is right here. See how these 3 bottoms hit?
Right.
Then I move it to the top of the body of these next candles, which would be this candle here. See, body, body, body. That gives me a rough estimate of what this is. Okay?
Okay, I get it now. I get it. I get you.
Right, and then they continue to print. So that's kind of what it is. Now, the theories behind this, right, is that when something breaks above, like here's an example of, let's say your strategy was to let the bottom of the channel is called support, top of the channel is called resistance. So the ideal is this, just like the last time, your strategy, or basically most people's strategy, is that when a candle prints on top of the resistance like this candle did here, okay, what they do is they then say, okay, it's going to pull back and I'm going to put my buy order on the resistance because I expect it to bounce off the resistance, right? But remember, like I told you, this system and this strategy only works 60% of the time. Do you understand?
Okay.
This is why when you have a system and a strategy, you got to realize that it doesn't work. The thing that we're looking for is the law of average. You want a system that can show you something consistently, and your strategy has to deliver higher percentages of wins versus losses. So if you followed the same strategy that made you 50% over there, what happened here was it actually dumped on you and went down here. Now, based on your strategy, depends on how much you would lose money, because there's strategies that protect you from this, because this isn't really bad if you bought here and you're not doing, let's say that there's 2 types of trading. There's spot trading where there's no leverage and you're just buying, and you're hoping this is a bottom and then you're going to sell the top, right? So you're not really in bad condition here. The only difference here is that a guy who's trading a little bit different, the difference between you and the next guy who buys at the next level is about 10%. Now, in the overall scheme of things, that's not that important as long as you're not losing. So this is called a spot trade, right? There's no leverage. This is just spot trading, right? And right here, you buy here, but instead of it going where it's supposed to go, it comes down here, okay? Which is okay, because now what happens is it trades sideways through this entire thing. But the problem is that now that you're in, and you don't know how far it's going to go down, because it goes all the way down to here before it actually starts to go back up, you see? Now, there's no loss for you really in this situation, because it's like, oh, I bought spot, I didn't have any leverage. So you're not really like trying to increase your trades, but I'm going to show you what leverage trading is in a second here. So right here, you bought here. It's not that big of a deal. The only thing is that if you bought differently, you could have made an extra 10%, maybe 11. Now, if you got 10 grand in there, that's $1,000. So, but let's say you bought here anyways, and then at the end of the day, you're holding, and then as you go along this entire channel, eventually it reaches a peak, which is over here, and I'll show you. You can see the peak right here. And your trade that you did bring in a total of 19%, right? So you see that right there? So you bring in, still not bad, right? Not bad, right? Now, the guy who had a different look at it, and he bought at the next way down, if he knew a better situation or had a better system, he bought lower than you. He made 30%. So 10% isn't bad, but if you make, let's say 3 trades a week, that's 30%. That's 90% in a month.
In a month, right?
All right, and at the end of the year, that's 1,000%. So it adds up. I mean, think of it like this: if let's say you're doing a $10,000 trade, the difference is $1,000, right? Mm-hmm. You do a trade 4 times a week, that's $4,000 a week.
4,000 a week.
56 weeks a year, you missed out on $250,000.
Mm-hmm.
So this is why it's important to try to find the best strategies within the systems to maximize profits.
Got you.
Okay, but you're still not bad if you're buying the pullbacks and you're just waiting for the push-ups, right? You just have to make sure that the system that you're using, make sure that you're getting into a lower area and then selling when you're supposed to, which is at the top. And that's kind of where the hard thing is. How do I know where to sell? Well, just so you understand that most whales, right? And this is a free. I used to charge a lot of money to teach this, man. Right now you're getting a $20,000 lesson, bro, for free. But this is how it works. Ready? When you see a pullback in a place where this all goes sideways, right? Whales, right, who trade hundreds of thousands of dollars, normally when they buy, their target is 30% gains. So what do you see right here? 30%. That's where they sell. So that's a free tip, man, for you guys. So if you were in TikTok today, you go ahead and chalk this up and say, DC just gave me a $10,000 tip for free. I appreciate him. Thank God. So if you're in here, you're getting the free juice today. You can go ahead and thank God. Do something good in your life today, because I don't normally do this shit. So now you understand is that when you do get into a trade, you got to understand that you're going to take profits at least. You're going to start taking profits after 20% from the mark of where it started, because whales are going to take profits from 20 to 30%. So you don't want to be caught holding the bag and then lose 10% on the dump because you weren't paying attention. Right? And then all of a sudden you went from 20 to 10%. Well, you remember what 10% cost a year, right? So now you're down to $500,000. So don't be that guy.
And that's where the emotional part come in.
Exactly. That's that greed.
That greed. Yeah.
Now here's how you do greed correctly, right? I'm gonna give you another free tip. So I run a boot camp, right? And this is what I do. I used to just go to traders that trade every day who already do these systems, right? They know this system. This is what they do every day. And what I do, I would charge $5,000, and I would say, let me teach you how to make yourself better in what you already do. And all I would do is this, right? And this is, you're going to love this. It's fucking great. So just like everyone bought here, right, at this level here, because that's what it's supposed to do every time, right?
Right.
What I do is I teach them to look at the other levels that already exist. And I say, well, this is what we call your main entry. This is called the greedy entry down here. And then the next level, based on Fibonacci's, there is a greediest entry, which is down here. And I would...
Okay, so the greediest entry, that's where the whales come in.
Right, but this is also when you're seeing pullbacks as the greediest entry, what you're doing is saying, hey, I'm not going to buy where everyone is buying. I'm going to try to get a better price. And then, you know what? If I'm looking, depending on you got to have a system that tells you. Our system lets you see this is happening, and then you go for the greediest, right? And this isn't that important for traders that are doing what we call spot trading, because spot trading is kind of like, it's going to repeat over and over, and you'll be all right by being a bad trader and doing that. But if you're using any type of leverage is where you use what's called future trading, right? Which is where they give you a multiplier, which means that when you see this percentage, you see how that went up 20% on that move, or that one that went up 50%? We use a multiplier times 20, okay? Which means that 50% move that everyone else made, let's just say 30. Everyone made 30%. Well, we multiply that times 20, so we made 600%. So we're getting 20 times more. So if you take that 10% that you lost, or that 10% per year, you multiply that times 20. That's what you're working with, right? And even if you did 10%, it's you know what I'm saying? That's where the difference is. Of when you have a strategy using leverage, this is the difference between 10% doing it with a 10x multiplier. That's a lot better, right?
Yeah, right.
So
it don't necessarily come down to the input. It comes down to, again, the strategy.
It's all about the strategy, right?
All about the strategy.
Because you can have a terrible system. Brian, what up, baby? I ain't seen Brian in days. You can have a terrible strategy, a terrible system. But if you can come up with a good strategy in that system, you can still make money.
Oh, man.
So you have to let me reiterate this so you can. The most important thing is to understand the most common system is Elliott waves, support resistance, and parallel channel breakouts. That's what most people, I'd say 90% of retail investors do. And their strategy is always to buy the retest, meaning that once it breaks out, it pulls back to some point, they buy the dip, and then when it runs, they sell when it touches the last high, okay? Mm-hmm. That is 90% of what retail investors do. So if you're doing that system, you have to say to yourself, and remember this, that this system only works 60, and now I'm being generous, 60% of the time, it's going to work the way it's supposed to. Okay? And then 90% of the people that are doing it fail, or 95. Because they don't sell when they're supposed to. They buy too early, right? So there's a little bit of things that in between the system that you can do wrong in your strategy that will cause you to be 95% of the losers. That make sense?
Yeah, I'm following you.
So that's really that's where you have to kind of put yourself in a position where you're really focusing on your strategy setup and what you're doing, because the strategy is everything, right? That's why when we teach, when I talk to people, I say, listen, man, what we teach is very simple. I have one indicator, and it tells you the only thing that matters. Doesn't matter what candle, doesn't matter what wave, doesn't matter what pattern, doesn't matter anything here. You know what matters? This right here. You know what this is? This is the money.
The buying points.
Yeah, this is the money. Nothing goes up unless there's money, right? So a coin won't go up unless you see this green right here. And you see the red, that means we're going down, right? So for instance, if I took this coin right here, right? You see, it's very simple, right? So I go to my indicator. I don't even need the chart, right? So I'll go here, and you see this orange line bending right here. You see that bend right there? So if I put an arrow right here, so these are every 2 hours. So this indicator would tell me at 2 hours, I would see it bend right here. So I'm going to put a line right here, and that right there would be, I'm going to make this one red because this is where we would sell. But I'm going to go over here, and I'm going to show you another indicator. When this became positive, right, we see this positive, I can see the breakthrough right here. You see how it became positive right here? I know that right here, that this is where I buy. Okay?
It became positive right here because that's where the dip starts to go back up.
Well, that's where the money comes.
Where the money comes.
Right? So theoretically,
people, that's telling you right there, people bought.
Right. Yeah. This is telling me that the money's coming, right? So you see how this positive volume here? You see the pullback, right? So this is the most I want you to remember this number 1, 2, 3. Okay. 1, it shows you what's happening. 2, it pulls back to where people are to the buy zone, and 3 is where you buy the buy zone. Okay. 1, 2, 3. Okay. So here, you see this move here? This is 1. Remember we just talked about wave 1, right? Look, wave 1, right? Wave 2 is the pullback, right? Wave number 3 would be this buy right here. So this is where we buy, you see?
1, 2, 3.
Right. So now I'm going to open up to where the chart is, and I'm going to find these arrows. So you see down here, see these arrows? I'm going to put these arrows. Let me see. I'm going to drag this up. Hold on. So I'm going to pull my indicator up so you can see. Okay, there you go. See my arrows? Now I'm going to pull the chart down so you can see where these arrows would be on the chart, right? So now,
Is that in the same place where you put them?
here. So this is where I would buy, and then this arrow would be where I would sell.
Where you would sell. That's where you put it earlier. Damn, I got you.
So based on my indicator, right, I don't need to be chasing channels, right? I don't need to see all this shit. I don't need a candle. I don't need any of that. All I need to do is go down here where the money is, and when the money does a certain move, because our strategy is based off this one indicator. So when this indicator does a move, when it does its 1, 2, we buy 3, this is our buy. So, right? And now here's the difference in the systems and the strategy. My system is based off actual money. Right? The systems up here that I was showing you earlier that 90% of everyone does, it's based off of hypothetically. Hypothetically, when there's a big push or a breakout, it's supposed to go up, hypothetically. 60% of the time, it does. Right? Now, over here, when my system does a certain move or it does a certain thing, I know that when it does this move, 90% of the time, not 60, I will get a positive move because it's the actual money. So when that move happens, I can get into this trade very confidently, and I can include, right? So even though I'm waiting, I'm being patient here, right? I have a 14% move, right? Now, remember, because we are very confident in where we're trading, and we have information that is basically has a 90% win rate. We can take our strategy is to put 20x on this. So this isn't 14%, right? Let's say you only use 10%. This is a 140% gain.
God damn.
Now, based on everyone else with the breakout, right? If they would have done the breakout like you did earlier, how much did you make? You made, the best you could make was 20%.
The 20%, right.
How much did I make?
Yeah.
So, systems are amazing, right? And the best systems out there is what I just showed you. Elliott waves, support and resistance, and what they call parallel channels, a parallel channel, okay? The strategy for that is the same for all 3 of those scenarios. Support and resistance has the strategy of this. You buy the support because that's where it's showing it's bouncing, and you sell at the resistance because that's where people are selling. That's support and resistance. Now, when it breaks the resistance, it becomes support, then you start buying the resistance, and the next time it runs up, that is basically your next resistance. That's your sell zone, right? Creating another sell zone. So just like an Elliott wave, when it pushes up, it pulls back 50%. You buy the pullback at 50%, and you run it back up to its previous high. It's all the same strategy based on 3 different systems. So the reason why that's important is because 90% of retail investors are doing the same system, the same system, and they're trading the same strategy. So if everyone's doing it and it's only right 60% of the time, right? That means that in reality, only 60% of the time, if everyone did it correctly, 60% of the time you will actually be successful. Right? Unless you're doing something like the spot trading, right? Spot trading. But your gains are like 10, 15% versus, 150. So even if you did this system, this is where most people they teach you okay, this system works. And the reason why it works is because even if you guess wrong and it pulls down like with this trade here, this one was wrong and it actually fell even further, right? But even though it fell even further, it didn't matter because it went back up to its original point.
It went back up.
Yeah.
Right.
So at the end of the day, you still made, even if you bought incorrectly, you still made 14%. Right?
Still ain't bad.
Still ain't bad. So now the difference is this, right? Emotionally, if people can't hold on while it keeps going down, and they say, oh, this is, I'm going to lose all my money, and then they sell, and then it goes up. And then they buy up here, and they only make 5%, after they lost 15%. That's why they lose. That's why 95% of people fail at trading, is because they don't understand the strategy. They don't have the strategy for the system. Right? So if you just followed the system and then did the strategy of buying when you're supposed to, even if it goes way down, eventually you just have to hold till it goes back up. Now, you're not going to...
What you saying is a lot of people get spooked.
Yes. Yeah. Emotional. They panic. Well, let's say, here's how it goes. Let's say you put $10,000 in, or let's just say $1,000 at this number here where it's supposed to bounce at 21 cents. Well, it goes down another 10%. So you're like, your $1,000, you just lost 100. You're like, and then it keeps going. You're like, you know what? I don't know what I'm doing. I'm going to sell. And then it starts going back up and it gets up here and you're like, you know what? Let me buy. And then it bounces back down again. You're like, damn, I lost another 80. Nah, I'm selling. And then it bounces up and you're like, you know what? It's going to do what I think. I'm just going to buy and hold. Then you buy and it comes down. And you're like, and then it goes up. And you're like, oh, it went up finally. But then you don't sell because you lost 30% here. You're only up 10% here. And then it dumps 40%. Now you went from 1,000 to $200 and you hate your life.
Damn. Yeah, you just drowned yourself.
That's why people lose 95% of the time.
Bad strategy.
Exactly. So guys, how do you get the indicator? All you got to do is go to my TikTok page. There's information right next to the bio. There's a welcome video. Go find it. So what I'm telling you is this.
What are they talking about indicator? What is that?
Well, they want this indicator here. That's my moon indicator. That's my money indicator. See, I don't trade off of this system here, right? The only thing that I do with this system here is it tells me what everyone else is doing, and then I look at my system to tell me when it's important. Because it doesn't matter what. Okay, like for instance here, right? Let me show you. This is very simple. You see here, this is on the system that basically is it breaks above the resistance. It's supposed to bounce here and go up, right? But if I go down to my indicator, you see here, see the positive money. See how it's going down?
Yeah, your indicator, it looks a little bit more simple for a person like myself to just look at it and watch it.
I wouldn't buy that bounce because I can see that the short's coming. So everyone who bought there wouldn't be me. And then when it comes down to the next level, we would let that play out, right? And then eventually we would see here, you see this green moon? This lets us know that it's actually going up the right way. So this is where on one of our strategies is the 2-hour moon. We would actually buy here and know that we're in good position because we know that everyone else, 90% of the people bought up here. So you guys are holding your bags. So I can buy down here comfortably because I know that the run is coming, which is this from here to here. So that's our strategy, see? So that's why we can. The reason why we trade based off what everyone else is doing is because we love bad traders. It just helps us know where the money is. The difference is instead of making 21%, we're making 210. So let's say you had $1,000 and you made a trade and you did 4 trades a week and you made 20%. You would be an amazing trader because you have a system. I just gave you a system. I just gave you Elliott Wave 1, 2, and 3. I gave you the parallel channel system, and I explained the strategy on how to do both of them when they break out above the parallel, and then when it retests is your entry, and then your target is the previous high at 20% or 10%. And when an Elliott wave hits its high mark, you wait for a 50% pullback, put your buy entry at 50%, and let it run back to the previous high for 10, 20, 30%. I just gave you a winning strategy that will work 100% of the time. Now, you have to say to yourself, if VC gave me a system that works 100% of the time, which is what 90% of the people do, how the fuck are they losing 95% of the time? Bad strategy. That's it. They get emotional. They don't follow the strategy. They sell, buy, sell, buy, and the next thing you know, they buy at the top, sell, and now they're selling the bottoms, right? Instead of buying the bottoms, they're selling the tops. It's the person in the mirror. But this is why you have to be in a situation, man. That makes sense, chat. That making sense to you. Y'all hit ones in the chat. That making sense. And don't forget to share the live, guys, so we get more people in here. I mean, I don't mind going live and teaching you guys some simple shit, but it's like we got to have the conversations where it makes sense. So when you have the systems that everyone's doing and the strategy they're doing, now you know the game. Okay? I just gave you 7 years of education in 1 hour. Okay, you know the game. You came in here, don't know shit about anything. You know more than 80% of the people in this motherfucker. Right? You got a $20,000 lesson today for free. So God bless you. Somebody like you. You must be a good person because I don't do this shit. So this is reality. Yo, Tally. Tally's one of the students. Tally, how you doing, Tally? You doing good? So Tally took a bunch of other courses, took a bunch of other things, and then she found. Yeah, I think she started. I think a lot of people watch Calvin Hill. So she took Calvin Hill's courses.
I started watching Calvin Hill, man,
yeah,
like a few months ago, but I just couldn't really. I was trying to I was watching him, and I was, it's just some people you try to I couldn't connect with what he was doing. That, just for me personally, it's just my opinion. Just one human.
Yeah.
I couldn't crack class going to his strategy. Mm-hmm. His system. I couldn't really get into it like that, so I just kind of pulled back and started going back to YouTube, and I'm like, damn.
Right.
Yeah, I mean, I'm not saying he's not a bad.
No. You're right. Yeah, I mean, it's good. It's how you explain it, right? It's how you learn it, right? And but here's what I'm gonna tell you. Let me say it again to you. What he's doing is the same thing that everyone else is doing. Buy low, sell high, right? But 95% of the people are still losing. Right? It's strategies for your systems, right? So you have to realize that the first thing you have to do is understand, right? And I'm gonna give you the sauce right now so that you can be successful where everyone else failed. You do not trade emotionally. Okay? Here's what you do. You create a strat. I just gave you. You can go back. This will be on my. You can see my other channel, my tube channel. I recorded this for you. You can go watch it. It's going to be called "Hanging Out with Barbber," hanging out with detailed hairlines, baby. This is the lessons. You can go back and watch this. You literally take what I just taught you today and make 20% on each of these big moves every single time. It might take a day, 7 days, or whatever, but you can do this. And if you're doing $1,000, $2,000, $3,000 trades, you're going to be making $300-$400 every week or two. you know, and if you're doing that every couple weeks, you can keep increasing your bag, and eventually your bags are 5,000, 10,000, and then when you do 30%, it's 3,000. If you're doing 3 of those a month, it's $9,000. That's $100,000 a year. But see, that's right there. That's a strategy. That's the MTE strategy. That's where we teach you how to compound your profits, and basically how to, you know, take what you're making and turn it into like a fortune. That's the difference. Is nobody teaches the strategy of how to actually get really wealthy, right? So this is what I want to tell you, so you don't make a mistake. This is what it is. So when you do a trade, okay, remember the system only works 60% of the time, the way it's supposed to, right? But it works 100% of the time of what it eventually is supposed to do. Now, the only fucked up thing about that is in crypto, we have what's called market cycles, okay? And I'll break it down to you just kind of simple. And this is where we are. So let's say, okay, and I'll start in the time that where people, you can kind of understand how it works. So let's say that on March of the year, we have spring break, right? Most people go on vacation. So where do they spend their money? On vacation. Then when they come home in April and May, what do we have in May? Weddings, right? Graduation, right? Graduations. So people spend a lot of money on graduations, right? You got to go see your person in college. You got to fly the family, whatever. So markets like crypto don't do well from March and May, because that's that the people are on vacation and people are doing graduations. And then in June and July, most people are barbecuing, so there's not a lot of money in crypto. And then as August comes around, people start going, oh, you know what? These crypto prices are really low. So they start to buy in August. Then what happens is August goes to September. What happens in September? Kids go back to school. So then they sell their crypto because they got to buy school supplies. Then the market goes slow from September till October, because people are buying for their children. And then what happens in October? There's a little pump in the beginning of October, you know, maybe a week or two, which is where we're at right now, until October 20th. Why? Because they have to buy for Halloween. So then the markets slow down because retail doesn't have a lot of money because they're buying Halloween. And then after Halloween, you know, they realize that what comes next? Black Friday. So then Black Friday means they're spending all their money on new TVs, so there's not a lot of spent. And then there's a spike in there where people go, oh man, this is pretty cheap, and there's a little spike, and then all of a sudden people sell those profits because they're going into Black Friday and Christmas, right? Then December 15th, people start sitting around getting together. December 20th, they their parties. Right after Christmas, they're getting money, and they start buying crypto again. So December 25th to January 5th is where people start dabbling again. January 5th, what happens after New Year? I'm going to get rich, I'm going to work out, I'm going to invest more. January 5th, people start investing more, right? Because now they're getting in there. By January 19th, what happens? People start getting their tax money. Goes right into crypto. Crypto runs from January 19th up until March 30th, because that's the highlight of tax money and people buying shit. Because then April comes, and what comes back in April? Spring break. So now the reason why I tell you this is because when you do a system where you have to hold for an X amount of time because you're doing no leverage, you're buying. If you happen to fucking buy in a November 1st situation, you might end up holding that motherfucker until January 5th because there ain't no money coming to the market.
Ain't no money coming in.
So you're just sitting there with your 10 G's sitting in there. But listen, this is what I'm trying to explain to you. Once you learn when not to put your money in, because you got to say, oh, I'm not buying until January 5th, right? You know that you're good. You ain't got to worry about that shit, and you'll get better prices after Christmas. But the reason why I say this is because you have to realize that you're doing a system that only has a 60% accuracy of when you should buy and when you should sell. And it works 100% of the time, but sometimes the average could be 7 to 30 days, but sometimes it could be 3 months before you get your money back. But as long as you don't sell, you don't lose. Because it always comes back. Now, if you had you fucked up and did what I told everyone to sell Bitcoin at 69,000 back in 2021, everyone told me I was crazy. It went to 15 grand. Now, some of those motherfuckers had to hold for 3 years. But if you know what you're doing, you don't make that fucking mistake. So what you need to do here is have targets of like, okay, I buy here, I make 20%, I make 10%, I cash out. I make 10, I make 20, I cash out. I make 10, I make 20, I cash out. And then just keep increasing your bag. So start off with the same amount, $1,000 or whatever. Make 10%, it's 100, cash out. Do 10 trades in a row, 10%. Now you have 1,000. Now you have $2,000. Now you put $2,000 in, right? Now you have 2 bags. Now the thing about having 2 bags is that you can buy 2 different coins. You can buy Ethereum, you can buy Solana. Now, when the coins make their moves, you make 10, 15% on each of those. Now you're making 150 on each of those. Now it's $300 every 7 days. Now you compound and you start adding that into your coin. So now it's $1,300 a trade on Solana, $1,300 on Ethereum. Boom, boom. Eventually, at the end of the month, you do like 4 trades. Now it's $2,000 on Ethereum, $2,000 on Solana. By the end of the next month, it's $4,000. By the end of 7 months, your bags are 5,000, and every 10% is 5, 6, 700. So at the end of 4 trades a month, you're putting 2,000 or 3,000 into your bag, and eventually, by the end of the year, you have a $15,000 trading bag on 2 different coins. You're up 30 grand. And every time you trade, you're taking in basically $35,000 to $4,000. So if you do 4 of those a month, I'm sure you'll be all right. That is how to make 100 grand, Brand. My friend. See how easy that shit was?
BC, you have been a blessing from the internet gods tonight for all of us that's in this sector, in this room right now, man. I see everybody still here, and for good reason. You broke that down to me, and my son could have understood this.
Absolutely. That's why we had call it MTE, making trading easy.
Yeah, for sure, man.
Okay, look. I wish I would have showed this earlier. See, this was already here. See, I had the arrow, right? See my arrow for wave 1? You see how I drew my arrow back? You see? Already here? And then the next arrow we have, which is this one, this is the one that we had that goes back up. Now, it doesn't pull back as far as where we had we call it a cluster, right? See the cluster? The top bottom, this is just a channel on the 15-minute. Channel, 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 channel. You see how it broke through the channel? We expect a pullback when it breaks through the channel. Now, you buy the pullback, and this is wave 3. So now we expect this to be the biggest wave. So we're expecting Solana to run up to 226. So that's going to be a trade that runs up about, in this move right here, this is just a basic move of 2 to 3%. But remember, we're doing it on a $2,000 trade with 20x leverage. So this is 20, 40, 50%. So this is going to be a $1,000 trade over the next couple hours. And we do 4 or 5 of these a week.
Shit.
So if you're only doing half of what we do, and let's say you do $2,000 a week, 2 trades, times 56 weeks a year, it's not bad for a part-timer. But here's the system, right? You see our moon indicator? Let me bring this dude up. See how the moon indicator is set up here? So all we do is we wait for the money to show up, right? On a certain time frame, once it's set up, our strategy is once we see the money come in, like what it's doing right here. See this money right here on the 15-minute? See how it pushes up?
So listen, so what if I buy in down at the bottom? If we go down where you was just at.
Oh, here?
To your indicator. Go down to your indicator.
Oh, yeah, right here.
That's the buy-in right there, over to the right.
Yeah, you'd buy right here. So you'd be in it at 217. So let's say you didn't use any leverage because you're just learning how to trade.
Okay.
Right? This move would be about an average of 4%. So you would use something very small like, let's say, 5% leverage. So 5 times 4 is 20%. So let's say this is a $2,000 trade, right? So at the end of it, you're walking away with $400 on the day.
Not bad, man.
Nah,
Not bad.
that's a good day.
How long you been doing this?
Trading probably about 15 years. But I built the systems that I built now are built for like people like you. Like you come in, you don't need to spend 3 years learning patterns, candles, support and resistance. Right? You can simply come in and I can teach you in literally I just taught you an entire lesson in 1 hour. I taught you what everyone else is doing, what a system is, what strategies are, how to trade everybody's system and strategy at one time, and now I gave you a strategy of how to actually make money with their system. And then I told you if you learn how to use what we call leverage, you can take 4% moves and turn them into 40% to 80%, which is 4 times more than what the money makers are making.
Well, I'm definitely locked in, man. I was
So guys, if you chat, if you want the indicator chat, go to my TikTok. Right on my TikTok page, there's information.
okay.
The Elliott wave indicator, guy. I haven't messed with the settings on the Elliott wave, to be honest with you. It's all the same. So when you type in Elliott wave, just grab the one that says by Lux Algo. I don't really mess with their settings because I don't really need it to show me anything. So I just use what they have. So that way, anyone who's using their indicator and they say that I'm using this indicator, we all have the same. The only settings that I mess with is something when let's say that I add an indicator, I have another indicator. The indicator that I have is a buy and sell indicator. So that indicator is called. Let me find it here. Okay, that indicator is called the Making Trading Easy Price Tracker 2, right? So that would be, I think it's this one right here. Yeah, so this is the price tracker. So this is an indicator. When it's on, it actually gives me buy and sell signals, right? So you can see right here, here's a sell signal that came in. And then this one you have to change settings depending on what coin you're buying and selling. Because each coin has a different value, right? Some coins are worth thousands, some are worth hundreds. So you have to take the time to adjust the setting to those coins. So like for instance, if I was using it on Solana, then I would go into the settings and I would start adjusting it for my Solana. So I would change this to probably 2. I would probably amplify this to 150, and then it would look like let's see. Let's get some indicators here. All right, so let's say I'm going to use this at 10. Okay. All right, so what I want to do here is I would just simply adjust my indicator to this buy and sell. So if I take my setting, let's see Elliott waves. So take our indicator, take it down, and then I would just start moving this down until it actually fits with the other indicator and shows me a better buy signal. So now what's going to happen is this is going to be, okay, right there, you see? So now, see the sell signal here? It tells you to sell. But more importantly, I'm getting a 15-minute buy signal here, you see? Now this buy signal is only important if I get a buy signal, it alerts me that there's a buy signal. So I can put an alert here and I can add an alert, and what will happen is it'll send me a message to my email telling me that I have a buy signal. And then if I go look at the buy signal and I realize that the money indicator is now broken above positive, then I can set up and say, okay, well now that I know it's here, I can set up a pullback, which is right here, and then I enter here. And then I take that trade. So yeah, there's different strategies that you can build off the indicators. This indicator is just kind of like, it's kind of like our overkill. It's just used for confirmations where you can give yourself something like an email alert, right? So let's say that I set it like this, right? I'm gonna show you. So let's say that I wanted to tell me a little bit earlier that I want buys. Then I would put it here, and now when I get the buy signal, it shows, notice that the buy signal is actually right here on the breakout, you see? So the buy signal happened, I would be buying at 219, right? As long as that the volume, as long as my money shows that the money's there. So I would get an alert at 219, let's say that I would buy based on whatever strategy, right? If I'm doing a 15-minute buy signal, then I'm doing a 10x versus a 20 because I know there's going to be a pullback. So I would buy here, and then so I'm still in a great position, and it's the same position that everyone else in the world is buying, except I didn't have to watch a chart for 14 hours. I can set an indicator, tell it to tell me when it happens, and it'll send me an email, and then I can just go set the trade.
I was under the impression that you have to sit here and watch it all day long.
No.
I'm like, I can't.
Nah, you can. I mean, you can use. That's why we have buy and sell indicators. That buy and sell sends you an email and lets you know that you need to go look at the chart because things are happening.
Okay.
Yeah, so you can use that too. I just don't use it because I use the money line. It's like we have. So if you go to our Discord, right? So inside, like kind of like this is called a chat, right? So you can see inside this chat starting 9 a.m. right? I started talking about a cluster at the price of 219 for Solana, right? So you see that, the cluster right there? So at 9 a.m. this morning, I've been lining up this trade. You see that? 219 bottom cluster. Look for 30 moon entry. 30x long, right? Which means we're doing a 30x on this trade, right? Then we have the greediest. Then you can see here that I put my limit orders, right? I have a 217 limit order, 217, 219, right? So we've been setting up this trade literally all day, and then this guy got in at entry price 217, the greediest. So he's probably up at this point, probably like 300%. So this is where we go through the full trade. It's a $1,000 trade. Like I said, it's not financial advice, guys. This is what we're doing, what we're on personal journeys. And then I walk you through the cluster, right? You see that? See how you see the 15-minute cluster right there? That's the same cluster. If you go back to the chart, it's right here.
Yeah, it's the same thing.
Yeah. So we've been tracking this trade in the free chat. It's a free chat. It's a free chat. And then we have our targets. We're looking for 227, right? So now everyone knows. And then I say, here's the 2-hour moon showing that we're going to get money, right? So here's the money, and then we just kind of like, yeah, here we go. Here's that guy. He's up 57 on another entry. Yeah. So yeah, then we walk you through everything, man. It's all like, it's, you know, my indicators. Everyone gets the. I mean, this shit ain't hard, man. Right? But it comes down to this. What I'm trying to tell you, it's strategy. Also, that'd be the VC. So if you go, like I said, everything's on TikTok, man. Just go to my bio. Go right there. There's a link for you guys, man. Just look at the TikTok shit, man. So Nikki's in there, right? So Nikki's learning how to trade. Nikki came from another Discord group. So Nikki, how long you been in the group? So she was in another spot, some other program they were doing. I think they paid like $5,000 to learn how to trade. Yeah. So, you know, and we have our free chats, we have our free groups. Yeah, spooky. Yeah, that's I mean, bro. So the trades that we're doing are $2,000 to $2,000 trades, and we're making 300 to 700 daily. Not financial advice, guys. Just our journey. Don't want TikTok all pissed off. So Spooky, are you in the U.S., Spooky? So guys, it's really this simple, man. It's not that hard. It really comes down, like I said, today the lesson that I gave you was explaining that what the strategies are, and then what everyone's doing the same shit. Buy low, sell high. And I explained to you that the systems are all the same, right? The difference is this. When you have a system, you have to build the best strategy for the system in order to be the most profitable trader you can be. And what I wanted to tell you, man, was the secret sauce was this, brother, is that when you make trades, okay, when you do trades, all right, you have to use the same amount of money. So if you're doing $1,000 trade, remember, but here's the thing, when you make a trade and you get on an entry and you do what you're doing, you have to let it finish, right? You can't like let yourself pull out of a trade because you personally think something else is happening, right? It has to do what it does. Your job is to win, and this is kind of like a simple thing. It's your job is to win 7 out of 10, right? So let's say that your wins, right? Every time you win, you win 30%, right? Or let's just say, 30%. So you win $300 every time you win. When you lose, right? If you're doing spot trading, there's no way to lose unless you sell. But let's say that every time you get into a bad trade, right? This is where spot traders lose money. Is that they get into a trade, there's no way for them to actually lose money till they sell, but they'll sell at 10%, 20% loss. And then it'll go up, and then they'll buy again, and then they'll come down 20%. That's where they lose. Now, if you're doing like putting a 5X in there and you're using leverage, like you're going to have things that are called stop losses and things where you have to get out, where it's like the max you can lose is this. So our goal is this. Our profit is 30 to 60%. So we average 45. Let's just keep it simple. Say we take 30. Our losses are designed to lose 20%, right? So if I lose 3 losses, I lose 60% total, right? Right, which would be basically 20% of my 1,000. So 200, 400, $600. Okay. Now, on my wins of my $1,000, I'm averaging, let's say the bottom is 300, right? Because I'm doing 30%. So 30 times 7 is 2,100. So I win 7 out of 10, but I lose 3 of those, right? So I have $1,000 that I'm trading with. So at the end of it, minus my losses, I'm up 1,500. What does that mean? That means if I'm using a $1,000 bag, I'm up 1,500 at the end of 10 trades, and I'm terrible. But what happens is you just doubled your money. So now you do a $2,000 bag, and now the difference is at the end of 10 trades, even if you lose 3 of them, now you're up 3,000.
Still up 3,000, yeah.
And you keep doing that. So the sauce is not to change. So here's what I mean by this is, say you start off and you have $1,000. You make a trade and lose 30%, right? You lose 300. You're like, damn. Then you put 700. Now you don't add 300 to your bank account to make it 1,000 again. You stay at 700. You win 30%, right? Technically, you just lost 30% and now you won 30%. You should be even, right? Except you didn't add your 300. So now you won 30% of 700, which is only $200 down. So now you won, but you're still down 200 because you didn't trade the same $1,000. See what I'm saying? See, here's what most people do. They'll trade 1,000, lose 100. Trade 900, lose 100. Trade 800, win 100. Trade 900, lose 200. Trade 700, lose 200. Then law of average means you have to get lucky sometime. You get down to $300, and then you trade and go, and you have a big ass run, and it does like 100%. You're like, yeah. Well, you only had 100% on 300, so you're at 600, and now you're still down 400, and now you just whittle your way down because you don't understand.
That sounds like a waste of time.
Yeah.
Yeah.
True. What up, True? True North. No one ever explains that, boss. Exactly. Listen, man, I'm just, the reality is this, guys. It don't matter where you go on any trading platform or talk to any trader or talk to anyone out there. The traders that you love, all the traders that think they're the greatest, I've taught those traders and people like them to make 50% more. Right? Like what I do is not trading. What I do is fundamentally, basically mathematical, strategically trading. I trade at the highest level of probability. It's not trading. It's a structured, systematic system. It's systematic. Systems never fail. People do. And this is why when you come to my channel and you listen to me talk, when I give you sauce and I teach you shit, it's shit you will never ever hear anyone else say, because they don't know what the fuck they're talking about. Because they're part of the 90% that trade the same system and strategies that cause 95% of the people to lose. That's the difference. So I'm going to